So heads are literally exploding right now because people are losing their minds over these drops, pretty big drops and sell-offs in the stock market, and frankly, in stock markets across the world, resulting from the tariffs announcement a couple days ago. I just saw a photo on a CNBC article with a stockbroker at the U.S. Stock Exchange with his head in his hands crying. It was, I don't know if it was stock photo or taken today or what have you. But that's what kind of led me to the title for today's video, or the thumbnail, which is "It's Time to Cowboy Up." And for all my lady viewers, cowgirl as well. The point is this: how many years has the stock market enjoyed a free money orgy? And what I mean by that is low interest rates, low borrowing costs for capital, so people can make huge investments in the stock market, and many times on margin because they are greedy. How about all of the COVID money that was free-flowing and pushed out there, which people took and piled into the markets that drove up the value of all assets? So, I, for one, am not sad to see this happening. It needed to happen. People might say, well, you're not in the stock market, and that's true. Because I've seen this thing get more bloated and bloated and bloated, and I've read the stories about P ratios and big names that say, look it is overvalued by a lot of metrics, and so I've decided to stay on the sidelines. And I've always said, and I've told friends of mine that are all in the stock market, there will be a time to buy in the market. I still don't think that time is now. I'm not an investment advisor. I'm not an economist. I'm just saying my personal layperson view, not a market expert by any means. I will say this: I am in the gold and silver space, as you all know if you watch this channel. I'm not all in. Today took a big hit. Gold was down $77. Silver was down over 7% today on top of yesterday's losses. So again, a lot of asset classes have fallen. Oil down $6.5%, down to $62.60 a barrel. The 10-year bond yield fell 5 more basis points today, closed below 4%, 3.998%. Gold and silver took a big hit. What did not take a big hit today, from what I can see, is cryptocurrencies. Yes, over the past several weeks and a couple of months, they've been taking a hit. But interesting to see that they did not trade in concert with the stock market today. Bitcoin held to a little bit up. XRP held, was a little bit up. So anyway, again, I'm not telling you that I am an expert on that market. I'm just saying, observing it, I wonder if we're seeing a bit of a decoupling between the stock market and the crypto markets. We'll have to see how this plays out over the weekend and into next week. But these people, these grown men, sitting there crying because we have a 2,000 point drop in the Dow today and 1,000 or 1,500 points yesterday. My friend texted me, the good friend of mine, and say he lost $185,000 in the stock market today. He lost, I believe, $115,000 yesterday. So he's down $300,000, $325,000, let's say, on paper, right, in the last 48 hours. That sucks, right? If I look at, my gold and silver, it's down, okay? It's down. But again, you don't technically take the loss until you freak out and sell. Things will come back. I hate the old line that says, what goes down must come back up. I always hear that from older people, people that say 50 and over, because they've lived through all these stock market cycles. But some cycles take a lot longer, okay? Some people are still reeling from the 2008, 2009 financial crisis. Their portfolios still never got back to what they were. Same with the dot-com bubble. So don't tell me, what goes down must come back up. No, it doesn't have to. It doesn't have to at this level that it was at, and it certainly doesn't have to in any prescribed period of time. So what's the moral of the story from my perspective? As a layperson, small business owner, investor, saver, don't have all your eggs in one basket. I think I shared a story last week on one of my videos that I saw a young gentleman had decided to sell all of his crypto. It was about everyone is becoming a gold bug now. It might have been in my gold rush video. And everyone's deciding to become a gold bug, then, right? Gold was moving towards $3,200 an ounce. It's shed a couple $100 an ounce almost since then. But this guy decided to sell all of his cryptocurrency and put it all into gold and silver, right? So he's probably not real happy, as of at least right now, that he did that. And the point is, it doesn't matter what it is. It doesn't matter whether he sold all of his gold and put it into Bitcoin, sold all of his cryptocurrency and put it in the stock market, sold everything out of the stock market and put it into cryptos or metals. It's about spreading it out and not having all your eggs in one basket. So you're levered up, in all these risk assets to the point where if something happens over a series of days or weeks or longer, that you do not lose your entire nest egg. You don't lose your entire retirement. You don't lose your entire savings, okay, and things you've worked for and monies that you're either using now to support your family or plan to use in the future to support your family, okay? So, again, all I can say is for those that didn't think the stock market was highly overvalued, highly levered up, and basically juiced up on massive market steroids, I'm not sure what you guys were thinking, right? And that's just coming from a layperson observer, all right? You can say that about lots of industries, and yes, they get oversold. Some might say, hey, gold was even oversold at $3,185 an ounce. Some might have said that Bitcoin was oversold for a period of time at $109,000 per Bitcoin. But the point is you've got to pay attention to this stuff. If you are just parking money in assets and sitting on the long side, and you don't have let's say your resources spread out, then this is the kind of stuff that can happen. So it's a buyer beware, caveat emptor, as we say in the legal profession, right? So again, I know it's coming across as a bit harsh, but when I see grown men crying, it's like Jim Cramer in 2009 coming out to the Fed, yelling, "You've ruined everything." I mean, whose job is it to protect your money? Whose job is it to protect, the fact that you will have money there for your family and to preserve your wealth? It's your job. It's not the president's job. It's not your investment advisor's job. It's not your stockbroker, your mom's stockbroker's job, whatever. You get the point, okay? It's your job, and to be prudent with your funds. For those that are in the stock market, I have friends, I know people, they're in the stock market heavy, even on margin and with lines of credit. And, they have debts, they've got payments, they've got car payments, they've got things, they've got taxes they have to file, things of that nature. Maybe this will be a wake-up call for certain people. I have a feeling it will not be. I wish it was. So let me share with you the story out of CNBC about the stock market. It is the biggest news today, okay? That I think we are all paying attention to, or I'll say, many of us. I was at the gym yesterday and working out, and a group of the girls in the gym are, I guess, watching these little eagles nesting and hatching eggs up in our local mountain community. I guess it's on closed circuit TV or something or whatever, like 24 hours a day live feed, and they're all fixated on watching these little eagles' eggs hatch. So, I don't want to say everyone is paying attention to this stuff, but the people that are watching this channel obviously are. Dow drops 2,200 points Friday. S&P 500 loses 10% in 2 days as Trump's tariff rout deepens. The stock market was pounded for a second day Friday after China retaliated with new tariffs on the United States goods, sparking fears President Trump has ignited a global trade war that will lead to a recession. If you didn't hear about it, China came out this morning and announced retaliatory tariffs of 34% on all U.S. goods coming into China. It says, here's a tally of the stock market damage. The Dow Jones Industrial Average dropped 2,231 points, or 5.5%, to 38,314 on Friday, the biggest decline since June 2020 during the pandemic. This follows a 1,679 point decline on Thursday and marks the first time that it has ever shed more than 1,500 points on back-to-back days. The S&P 500 nosedived 5.97% to 5,074, the biggest decline since March of 2020. The benchmark shed 4.84% on Thursday and is now off more than 17% of its record, or from its recent high. The NASDAQ, home to many tech companies that sell to China and manufacture there as well, dropped 5.8% to 15,587. This follows a nearly 6% drop on Thursday and takes the index down by 22% from its December record, a bear market in Wall Street terminology. The selling was broad, with only 14 members of the S&P 500 higher on the day. Major market indexes closed at their record lows of the session. China's Commerce Ministry said Friday the country will impose a 34% levy on all U.S. products. Disappointed investors who had hoped countries would negotiate with Trump before retaliating. The markets are always based upon hope, right? You hear the term hopium. They're hoping interest rates are going to drop. That's the big claim now today, is that and even Trump was out, kind of barking, saying that, that Powell should come in and drop interest rates now. Is that why? Is that to rescue the markets? Is that because we need lower interest rates? I mean, as you economists out there that watch the channel, please weigh in. Aren't higher rates, frankly, better for a healthy economy? Is it healthy to have low borrowing costs, which forces maladjustment when we have $30 trillion in U.S. debt and we have, expenditures and economic policies that are totally out of control? Again, that's more of a rhetorical question. But the calls are out today for Powell to come in and make an emergency rate cut. Will he do it? He might. He might bend to the pressure, right? Even the crypto market analysts are saying, wow, if Powell comes in and lowers the interest rates, it's going to be great for cryptocurrency. Okay, it might be. But again, to what end? Technology stocks, and as you guys know, I own cryptocurrency, okay? Technology stocks led the bleeding Friday. Shares of iPhone maker Apple slumped 7%. Apple's down 13% for the week. NVIDIA lost 7% and Tesla fell 10%. All three companies have large exposure to China and are among the hardest hit from these retaliatory duties by China. Boeing and Caterpillar, big exporters, led the Dow lower, falling 9% and 6% respectively. Here we go. The bull market is dead, and it was destroyed by ideologues and self-inflicted wounds, says Emily Bowersock-Hill, CEO and founding partner at Bowersock Capital Partners. And she says, while the market may be close to the bottom in the short term, we are concerned about the impact of a global trade war on long-term economic growth. Does she mean long-term economic growth, or does she mean growth of her clients' portfolios so she can keep making commissions? Again, how many years have we seen stockbrokers killing it? I know stockbrokers in my community that have been building multi-million dollar houses, driving, very, very expensive automobiles, taking extremely expensive vacations. Great, more power to them. But again, how many years, and that's because the markets go up, and when the shares go up, they make commissions, and they're killing it, right? Same thing happened back in 2005, 2006, prior to the real estate bubble bursting. How many realtors, were, multi-millionaires, several homes, cars, boats, vacation homes, vacations, all that stuff, until it came to an end. And when it did, it came to an abrupt end, and it was very, very ugly. So again, are we going to start seeing this now if these markets continue selling off? I still think that this is not the bottom from my perspective. Why would it be? Why would the uncertainty not continue as more countries come out and start, announcing their game plans in response to the tariffs? Again, I could be wrong. Maybe this whole thing on Monday bounces back and it's back to party time again. I don't know. Let me see what the article says. 10-year Treasury yield fell back below 4% Friday as investors flooded into bonds for safety, pushing prices up and rates lower. Well, the investors certainly did not flood into gold and silver for safety. You think that say this gold is a safe haven. Well, today, Bitcoin, the digital gold, may have been acting more as a safe haven than real gold based upon what I saw. Again, Bitcoin did not have a huge day, but it was for the most part flat to a couple percent up on a day when gold fell 3%, right? It says Wall Street's fear gauge surged above, the CBOE volatility index, the VIX, fear gauge surged above 40, an extreme level only seen during rapid market declines. And here we go, I'll finish with this. Trump did respond, made some comments, and it says Trump appeared to be steadfast in the face of the market's backlash to his tariff blitz, announcing Wednesday evening, posting on Truth Social Friday that the tariff announced Wednesday evening, and he posted on Truth Social Friday that, quote, policies will never change. The fear now as we go into the weekend is the trade war escalates and the U.S. doesn't back down, said Jay Woods, of Chief Global Strategist at Freedom Capital Markets. All told, the S&P dropped 9% on the week, the worst week since the breakout of the pandemic in early 2020. We're used to backing down, right? And showing weakness. So I wouldn't be surprised if there is no backtracking here. Now, maybe the Fed will come out and try to counteract some of this with something on its own, with a rate cut, something of that effect, which obviously would have a very positive impact on the markets, stock market, and on gold and on silver come Monday and early part of next week. But I wouldn't hold your breath. All right, I would make sure that you are taking care of your own financial house. If you're in this market, you're margined out, you've got credit lines, but you still have a car payment, or you still have a house payment, or you still, have unpaid taxes or unpaid credit card debt. Maybe you use this as a chance to realign the noggin and get your thinking in a little different perspective. So again, not lecturing anybody. I hate to see this, but it's been years of forced malinvestment, I think, through an easy money policy. That's all I can see happening. And yes, there's uncertainty, but it also shows how much froth there was in these markets. And I'm not even so sure as a layperson that we've even scratched the surface. But we will have to wait and see. I took a hit today on some stuff, on some assets, and we'll have to see how this plays out. Everyone, with that being said, keep your eyes open, your ears open, head on a swivel. Have a great weekend. Try to just detach if you can from this stuff and spend some time with family and work on your health. At the end of the day, that is everything. I was meeting with a client yesterday, and she's just distraught over a lawsuit she got brought into on a real estate dispute. She got named, and we're defending her, and she's elderly, really, really sweet lady, but she's dipping into retirement to pay for legal fees and defense costs. And as I walked her out of the office, I basically said, look, do not let this consume you. Do not let this start to affect your health, your relationships, your marriage, whatever that is. And it does, right? Because people's money is more important to them than anything, it seems like, in today's society, right? But I hope and wish, and both those terms I don't like, but that shouldn't be how it is, right? So if you're one of these who've taken a hit in the market this week, or on your metals or on your cryptos, take a deep breath. Life will go on, and just focus on maybe some things that actually are more important, like family and loved ones and friends, relationships, things of that nature. And of course, don't forget your health. I'll be leaving here in a little bit to get my workout. I went a little bit long today, a little bit of a ranting video, but it's frustrating to see grown men crying as the stock market goes down, right? grow a set of you-know-whats, cowboy up or cowgirl up. And with that being said, I will see all of you next week. Have a great weekend. Bye.